Good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist of WealthPress. Today's Thursday. It's November 3rd. It's about 8:10 in the morning. The market's going to open up in about an hour and 20 minutes. And oh yeah, it's one of those days. Now remember, I gave you guys 3 shorts yesterday. I recommended 3 shorts in morning video. It was these 3 stocks right here. Roku, JKS, and SBNY Bank. Oh, yeah. You guys remember those stocks. I just wanted to give you a little update of how they're doing today, 24 hours later. So Roku's going to open up down 20%. 20%. And it lost 4.35% yesterday. SBNY lost 8.34% yesterday after we discussed it. JKS lost 1%, and it's now down about 2%, so about 3%. So the first stock is down 20% that we set to short. No, 24.3% since we set the short, excuse me. The second one is 8.34% down, and the last one is down 3%. That's one of the reasons why you should watch these videos. These things actually work. Now let's talk about today's trading action. 25% since we called Roku yesterday morning. Not bad in 24 hours, right? If you guys are enjoying these videos, follow this channel, comment, post some feedback, and ask questions, and I will respond. Now let's get into today's analysis. I like that Roku trade. All right, 170 points down. That's after yesterday's down route, and the Nasdaq is down 118 points. This is a very, very broad downslope. Actually, the Nasdaq is taking it a lot more under the chin than the Dow, but I'm not expecting too much upside based on what I'm seeing from the Fed. Also, if you looked at the bond market is starting to curl south, and when the bond market's curling south, it takes the wind out of the stock market. Also, another major issue is the VIX index. We got out of a short. We had a short yesterday. It was down quite a bit. We had it for a long time. We didn't make money on it. We actually lost a little money on it, but I think volatility is going to spike in the next few days, and I would rather just get out of a small loss instead of creating a bigger hole for ourselves. Now, put the call ratio is finally starting to tell us that the market's getting oversold again, but it looks like there's more to go, and let me show you some evidence of that. What I typically look at, the number of 20 stocks making 20-day lows and 20-day highs. Now, typically we like to see 3, 4, 5, 600 to the downside. We're only seeing 65. So yesterday was just a reversal to the downside. It's not even a trout down yet. It's 25 stocks making 20-day highs, 65 stocks making 20-day breakdowns. The last time we bottomed, we had 4, 5, 600 stocks making 20-day lows. So there's still a lot more firepower to the downside. Now, let's talk a little bit about global economy, and then I'll move into individuals. And remember, today is Thursday. Thursday, I give you my top ETF and option pick. So let's not go anywhere. Global stocks sank yesterday after Federal Reserve added to recession fears by suggesting more U.S. rate hikes are likely to cool inflation. The fact that we were going to go up 75 yesterday was undoubtedly priced into the market. The question now is December. Now, there is something that the Fed said yesterday in their speech that no one's really talking about. But they did say something really important, and it was kind of buried in all this text. They said that they are taking the lag into account. I forgot the words he used. Maybe I'll back into it later on or during the VIP room. If you're there today at 11 o'clock, we'll be in there as usual. But at noon Eastern time as usual. But he said that they are taking the economic lag, meaning they are taking into effect the factor that what they're doing is not having an immediate impact. That's signaling that he's leaving a little bit of an edge to put a little pause on things. And again, if you're in my VIP room, I'll get into the statement again, but I was very happy to hear that. That's a very positive sign, and that's something I have not heard him talk about before. If I'm wrong about that, please correct me. But there was something about a lag, and I'll try to find it later on. Maybe I'll show in tomorrow's video, but I was actually surprised. But his comments were not nearly as negative as what we saw before, and he kind of hedged himself a little bit. So I'm thinking there's a really good chance we may see a 0.5 instead of 0.75, but we'll let the bond market tell us when it prices that into its value, which we should start seeing in the near term. So London, Shanghai, Frankfurt, Hong Kong, they all followed the U.S. market lower. When the Fed raised rates, 15-year high. Oh yeah, interest rates are going to be worth something nowadays. Oil prices fell by more than $1 because higher rates are not really great for that. It's more of a putting the country more of a pressure of a recession, which is not good. Mr. Jerome, I'm not going to tell you the truth till I get reappointed. Powell reinforced expectations of more rate hikes by saying we have a ways to go. He indicated that the level is high enough to bring down inflation, looks higher than it did in September, but gave no target. So it appears like he's thinking it may have some impact, but we need to wait a little bit. Tech, retailers, and healthcare companies were amongst the biggest decliners. I'm actually a little surprised that we saw healthcare decline, but energy declined as well. That's because investors were fearful of a recession. Healthcare, nothing really does well in a recession. The Fed and central banks in Europe and Asia have raised rates aggressively this year to stop inflation that's running at a multi-decade high, 15-year high to be specific with you. Investors worried that may tip us into a recession, and I fully believe we are in a recession. Consumer prices rose 6.2% 1 year earlier, as previously noted. Core inflation, that's what the Fed really looks at, and I'm glad they're going to finally take some lag into account, which excludes food and energy, accelerated 5.1% from August 4.9. That is not good. Investors hope signs that housing sales and other activity are weakening might encourage the Feds to ease rate hike plans. I don't think they're going to do that until employment situation is worse and spending is worse. But the latest data, especially on hiring, is very, very strong. Data from payroll processor ADP showed companies adding jobs at faster pace in October than expected. And today, we've got international trades and goods and services. 71 billion deficit is what they're expecting. It looks fairly on target. It would be great to see this number a little bit lower. And jobless claims. Jobless claims, I'm really not expecting anything crazy. They've been in the low 200s. I don't want to make anything of it, even if it's a little higher. Now, if it's a 300,000 or 400, that's a different story. But honestly, if we're somewhere around the 4-week moving average, if we're up a couple thousand, down a couple thousand, that's not going to have an impact on this market. Now, earnings will have an impact on this market, and we've got a full plate today. Look at this. I mean, we've got a full plate, and they're getting more broader based. We haven't got into the retail too much, but they're getting broader based. You got ADT, you got ABC, you got Amgen, Gold, Square, that's going to be an interesting one. Carvana, very interesting one. Some energy stocks are starting to come out. Cigna, I mean, you got some big stocks. Kanako, Crocs, Dash, Loco, EOG's coming out, El Pollo Loco. It's a big company, and we see this in California all over the place. Expedia's coming out. That'll really be interesting to see how that goes. Kellogg's. I had some Kellogg's last night for dinner. Marriott is coming out. We're short this stock. Merco Libre, commerce from international commerce stocks. Moderna, another energy stock. Papa John's, PayPal. Man, we've got tons of stocks. Starbucks, Twilio, Wayfair, World Wrestling. All of those are coming out. And tomorrow, we don't have too many. Tomorrow, we end the route with Chicago Board of Option Exchange, Cardinal Health, one of the top healthcare stocks. DraftKings is going to be a huge one. Duke Energy, Fluor, another energy stocks. My mother-in-law and stepdad used to work for that company. Groupon, Hershey's is coming out, and WPC. So a very, very broad exposure. Peloton's coming out. So a lot. Starworks. Again, a lot of stocks are coming out. We're going to have a lot of volatility. The put-to-call ratio is, again, starting to really favor a turnaround to the upside, but we're not there yet, as I mentioned, because look at this. We barely have any stocks breaking down. We've got 65 stocks making 20-day lows. I mean, we're nowhere near a major downtrout yet. We need to see this number multiplied by about 5 to 6. As of right now, we could still see more downside. Now, in terms of sectors, let me just give you some idea of what's doing really good right now and what's doing really bad right now, because we're going to talk about ETFs in a minute anyway. So the strength is still in the energy, industrial, financial, healthcare, and consumer staples. But I'm going to tell you something. From where I'm sitting right now, I think we're going to see some more downside. And I think we're going to see some downside in sectors that have been moving a little higher. So I right now, in my opinion, I think we should be selling real estate. Instead of looking for stocks to buy, we should be looking for options to sell. Healthcare, probably healthcare, or real estate. I would say real estate. If this downtrod is going to go further, I would feel better shorting the weakest sector. So real estate, XLRE. Let's look at it, XLRE. Another few days, not a long-term play, but maybe for another few days to take us down to the lows, or maybe to the 33 level from the current level. I just see a lot more downside than upside right now. So let me go ahead to January. January's got plenty of time. You can go to puts. It's trading at 35. You can go to the 35. It's right here. It's got a great open interest and spread. Don't even look further. Don't go to the 30. 35 XLRE. Look for a little bounce maybe to the upside today before getting in, but I think the market is set on trading lower for the foreseeable future until we get some more downside and until we bottom out. And I think there's more downside because I think we went up a little prematurely. And with the bond market, where's that bond market? With the bond market turning south and volatility starting to rise off their 200-day moving average, I think there's a high chance that we've got a couple of more down days. I don't think it's going to be huge, but I think it's got more to go, especially with the number of stocks making 20-day breakouts versus 20-day breakouts. So January, XLRE, 35 call. Now, before I let you go, I've got something big for you, folks. This is the time to learn about global markets and how they react to U.S. economy and how global economy can impact U.S. stocks. This is the time to know about this. And guess who's really good at this stuff? Jeff Zananiri. Today at 1 p.m. Eastern time, he's going to go live. Yes, live. And he's going to expose what he sees coming midterm elections next week. I didn't even want to get into that this morning. So much to talk about. And regardless of what side you're on politically, it doesn't matter if you're a Democrat or a Republican, this is a briefing you do not want to miss out. That's because there's a massive political takeover that might be underway, and Jeff wants to show you the best way he knows how to play it and position yourself for this market shift. He's even giving away his #1 stocks to play to anyone that shows up. I'm going to be there at 1 p.m. You don't want to miss out. Check this out. It's going to be really cool. It's going to be an hour long, and I highly recommend you show up. There's a link below this video. We're going to stay to the short side for a little bit, let this stuff wash out, and then we'll start picking up bargains to the long side. How does that sound? But most importantly, don't miss out Jeff's class at 1 p.m. Bring your notepad, bring a pen. You're going to want to take notes. He's giving you the #1 stock. He's going to show you how to play the elections next week. You've got to check this out, all right? And if you like this video, comment in the channel, in the YouTube channel. If you can't find this video, go to the Wealth Press YouTube channel, and it's there. Bye, guys. Talk to you soon, and I appreciate all the wonderful email feedback that you guys have given me. Take care. Have a great day ahead.